Hello everyone, welcome back to another video on our YouTube channel today, and I hope you all are doing very well. So guys, I know it has been a long time since I've uploaded any videos, but I guess this break was necessary for me because I've been uploading, analysis videos on YouTube Shorts every day. So it's not quite complicated. My video stream is regular. It hasn't stopped anyways. And now what we are coming back to today's video. Now what we are going to do in today's video is our regular thing. That is, we are going to analyze Nifty and Bank Nifty on how it can perform on 25th of January 2023. All right, so let us begin with Nifty, right? So this is the daily chart on Nifty. Let me just remove all these drawings here. Okay, so the daily chart, you can clearly find Nifty has been in a supply zone here. It has created a supply zone, and the next major demand zone is here. Right, so next major demand zone, the last major demand zone was created on 30th September 2022, nearly 8 months ago. I'm sorry, not 8 months, 6 months ago. So, and now Nifty is standing in between the demand and supply zone. So it's technically in a bit of a consolidation, but on the daily chart, you could notice two patterns. In fact, two patterns. You could notice two patterns. The number one is the wedge pattern, which has been broken, but it had a false breakout. This wedge pattern was broken right here, but it had a false breakout, and the Nifty is sometime still in a kind of consolidation mode. The other kind of pattern is this, another wedge pattern. So this wedge pattern has been broken, and this wedge pattern is also retesting this major wedge patterns line on the daily chart. So you might expect Nifty to go up till 18,335 here. But this is not our case. What we are going to do is we are not looking at the long-term analysis. Rather, we are looking at what is going to happen on the market on 25th of January 2023. That is tomorrow. Right. So for that, we don't need a daily chart. We just need a 5-minute chart, right? A 5-minute chart. So let us just move these lines. Let this line be here because this is a major wedge, the bottom of the falling wedge pattern. So on the daily check, so let this be here because it has acted as a major support first time. It has acted as a major support two times, right? So let's just keep it as a major support zone on the daily chart. So now here you can see that today Nifty has been creating a small rising wedge on the morning, and then after the breakout, the Nifty had a massive fall to the downside. So hence Bank Nifty followed Nifty's movement. So we are going to mark a new supply and demand zones right here. So what we are going to do is we are going to mark this supply zone, which is here, and a demand zone, which is going to be here. Now you might mark this as a demand zone too, but it's not going to be feasible for traders. So these are going to be our supply and demand zone. Now here you can see that even though the market was in a falling pattern today, the Nifty had tapped the demand zone and rise up a bit. So it just rose a bit to the upside. So what you can do here is you might expect two things. Number one, if you notice this keenly, just you take the major pattern to the downside. It is a falling wedge, and here after Nifty tapped the demand zone, this has become a rising wedge pattern. So here there are two kinds of situation which you might a trader might be expecting tomorrow. So Nifty, what it might do is that Nifty, since the Nifty clearly hasn't broken above the previous swing high, we might not want to take any buy trades as of now. And Nifty also hasn't broken below this previous swing low here. So Nifty is somewhat in sort of a consolidation, in the decision making phase here. So you can expect Nifty to, perform two things. Number one, since this swing high has been broken, which is right here, this swing high has been broken, you can expect the Nifty, it rose a bit, it's falling down again. Now what Nifty can happen tomorrow is it can fall down again, create a double bottom pattern and start rising again till here, somewhere around here, or Nifty is gonna break this low, break towards this previous swing low, retap this previous swing, swing low became swing high, and then the Nifty is going to fall more. Fall till where? I'll tell you. If you take the medium term perspective, Nifty is going to fall till here, this day's trend line, day chart trend line. And if you take the upper perspective, the buy trades perfect perspective, then Nifty is going to go up obviously at least till here. Or in the major long term side, you can expect Nifty to go till here. So for intraday traders, this is going to be a very easy analysis which I've been posting for you. Now, what about Bank Nifty, right? So we need Bank Nifty. So Nifty is also clearly above, close below this 20 period moving average right here. So we need to wait and watch because these falling patterns, just because Nifty had broken above this rising wedge, many people would have taken a trade, placed their stop loss at the swing low, expecting the market to go here. The stop loss would have been hit. Why? Because you must have the telltale signs that Nifty is either going to rise or going to fall down. Now, most people, no one can be correct 100% of the time, but we must improve our accuracy, our odds of winning against the market. For that, we need confluences. Now, what is this confluence? Confluence are the things which I'm telling you. For example, you could use Fibonacci retracement, trend line, or a mixture of both, moving average, trend line, Fibonacci's, all these things, and supply and demand. So essentially, we are having a confluence right here. And currently, my confluence is telling me that Nifty is going to fall more, possibly, because tomorrow morning, if this demand zone is getting tapped again to the upside, then Nifty is going to go down. Or if this demand zone is going to get tapped to the bottom side here, then the Nifty is going to go up. So these are going to be the most basic part of the analysis which you are looking today. Now moving on to Bank Nifty, right? So people, we are looking at Bank Nifty now. Bank Nifty, most people must be knowing this. Options traders will certainly be knowing this. Nifty and Bank Nifty almost concurrently follow each other every single day, except a few days. Except sometimes Nifty and Bank Nifty, they both have the same trend. If Nifty rises, Bank Nifty is gonna rise, or if Bank Nifty is falling, the Nifty is gonna fall down. So essentially, Nifty and Bank Nifty are like the brothers, right? So now what happened here? I'll tell you a small brief analysis. Yesterday, yesterday, 23rd November. I'm sorry, excuse me, 23rd January. This was the major supply zone right here, right? We are on the 5-minute chart, and basically the next major demand zone because was this one. Even though this is a supply zone, once the market reaches this supply zone from the upside to the bottom side, then the supply zone will essentially be turning into a demand zone, possibly. Now, this is not always 100% of the time. It might happen depending on the market circumstances, right? So here, these two are the zones which I was looking the trade for. Now, people, I'm telling you, don't look for trades on the 5-minute chart if you want some quick trades or some quick bucks, right? So what happened here is essentially a manipulation, a small manipulation. Let me tell you. The market started with creating a swing high. Validate the swing high, we had a swing low. Correct. So for every swing high to be, valid, you need a swing low, and simultaneously for every swing low to be valid, you need a swing high. So this is going to be the next swing high. Now, what are swing highs and swing lows? Swing highs are two red candles, and swing lows are two green candles. For example, look at here. Look at here. This is a swing high here, and this is a swing low right here. Two red candles, and concurrently this lower low, this green candle is over, lapping below it, which is a good sign of a swing low, and another swing high, swing low, swing high, swing low. Now people, most people, what they happen is that they take a trade immediately once the swing high is broken, which for example which happened here, and they place a huge stop loss of 97 points, which is basically 0.2%, and expect market to go higher. Now this might happen, but not always. So look here, your earnings would have been lost if you are taking this trade. So what you need to be doing is very simple. Now concurrently in the 1-minute chart, you can notice that this swing high was broken. I'm expecting the market to retrace back to the swing high. at least somewhere around here, which happened, it retraced and the market created a swing low. And I expected I'm sorry, I expected to take a trade once the market broke this minor swing high, right? But this swing high was not broken, and rather this swing low was broken. So my bias immediately switched from bullish side to the market to the bearish side of the market. So what happened here is this swing low was broken, right? People look at this. Once the swing low was broken, you had a small green candle retesting it. Now, this is not always the case that once the market breaks below it, it has to go nicely and come forward to it back again. No, that's not the case. The market can even go like one small break to the downside, small break to the upside, and then a big down move. So market is all about patterns, people. Market is all about smart money. So once this swing low was broken, I had a minor retracement to the upside, which is right here. I'll tell you, right here. And then when this swing low was broken by this major candle, I realized, okay, the market is going to go down, and I took the trade. Small stop loss of just 42 points. And for my targets, I went to the 5-minute chart. Okay, so my 5-minute chart, this was my first target, and I'll just mark my targets for you. My first target, I'll change it to the yellow color. Second target, third target, and essentially my fourth target. People, now I don't wait for the market to go for all the four targets. What I did, excuse me, what I did was that when the market touched my first target, I waited for the market to create a swing high, a proper swing high, which was this one. This is not going to be a swing high because this is going to be a consolidation phase. Leave this phase out. Face this phase out, right? Face this thing out. Now, this is going to be the major swing high. I expected the market to break this, because the market was showing major signs. But when the market broke this previous swing low and didn't overlap below this previous swing high, I realized the market is going to go down. And I took my profits somewhere around here, on the third target. So this is where I took my profits once this nearly the swing. I thought the swing was about to be broken, hence I took profit in somewhat of a hurry. But still, anyways, it has been a decent profit. So yeah, this is what has been happening. And after I took my profits, the market had some sort of a consolidation phase and eventually hit my fourth target, which is the last one, which is our monsoon on the 5-minute chart. So people, this is what I'm saying. Now, how market will be performing tomorrow is what we're going to look at. This was the analysis for today's market. Now, what about tomorrow's market, right? The reason why I'm showing you guys the post market analysis of today is because you can get an idea of what's about to come tomorrow or what to do tomorrow in case if the market is has opened. If the market opens tomorrow, you can get an idea what to do in the market. You need not panic about it, right? So here we are on a 1-minute chart again. Before going on to a 1-minute chart, we are going to mark our major swing highs and swing lows. So this is going to be a major swing low. I just changed the thickness to 3 so you can see it. And our swing high, this is a valid swing high actually, but you might ask, the market is going down here, swing low here, swing high here, swing low. So this is a valid one. The market basically created a double bottom and it's rising up again. So if the market is actually in a bullish trend, the market will break this swing high. It's not, if it was just a smart money manipulation, then the market will have to break this low to be considered. Market will have to break this low, retest it, and go back again. Now, where will the market go? I'll tell you. The market is going to go first one. It's somewhere around here. Yeah, the market will go here. And if that's been broken, market's going to go here. Now, people, I'll advise you, if the market has broken the swing low and started going in a bearish trend, then you can start taking your profits right around here. Or, excuse me, or if the market has broken this previous swing high, retraced, then the market will be going up till here, and you must wait for the market to come till this area to take your profits. What if the reversal signs are found here? Then you can expect the market to reverse, and you can close your trade somewhere in the middle if you think that the market can possibly reverse here, because that is basically what I do. I always look for signs the market is going to reverse. If the market is showing me signs of reversal, then I'll just exit my trading. No greediness, because greediness is going to destroy you in the long term. No greediness. Small profits made every day goes a long way in the long term, goes big way in the long term. But big profits made every day due to greed is not going to last certainly in the long term. You might make 10,000 rupees today because of your greed, and if you decide to, invest 3K of it tomorrow and the market goes against you, then you're going to lose nearly 7K. And essentially, you've lost 70% of your earnings. But if you just invest 1,000 rupees in the market, and that too with pure technical analysis and know-how of the market, you're looking at the technical factors or the fundamental factors, whatever you might, whatever which suits you, you just invest 1,000 rupees and get a return of 500 to 1,000 per day. For 10 days, it's going to be 10K, which is 10,000 rupees, and for 100 days, 1 lakh rupees. So essentially, that's how you need to calculate, because when your margin increases, you have your risk taking ability to increase. But without this know-how factors, if you're going to launch yourself to the market, trust me, it won't work, because every trader needs risk management. You cannot risk more than a certain percent of your account, especially in options trading, because options trading is highly volatile. So you must always have your own analysis too before taking a trade. Now, this is what I always stress, guys. So see you all in next video. If you really like this video, guys, then you can tap on the like button and comment on this video. So thank you all. See you all again on the next video, which is tomorrow.